We are live. What is going on, ladies and gentlemen? Welcome back to another episode of Let's Talk Crypto with myself and my co-host here, the Bitcoin Queen. How you doing, Queen?
Pretty good. It's been a pretty eventful beginning of the week in crypto. I was gonna say wild, but it legitimately eventful is the correct word to say. Other than that, pretty good. I got my nails done. It's been a couple
Nice.
weeks. Somebody botched them like a couple weeks ago,
Oh no.
so I found a new nail lady, and yeah, here we are, ready to get down to business.
Nice, for sure, for sure. So yeah, I mean, it was kind of a boring weekend. I think there wasn't too much going on. If we look here at the
Except for Sunday.
yeah, if we look here at the chart, we'll see. Excuse me. We'll see that yesterday was when things kind of went back online. But for the most part, on Friday and Saturday. Sorry, let me put the chart on the screen here. On Friday, Saturday, nothing really happened. Sunday, then we got a small move down. We dropped from, let's see, the high was 23,442. The low was 22,760. And currently, right now, we've hit a low of 22,561 earlier today, but we're currently sitting at around $23,000. You can see that that is going to play as a small support there. I'm not going to say it's a big support level, but that little range, probably between 23 down to around 22, you can see that that's forming sort of a bull flag there, right? So we're forming some sort of channel where we have some dynamic supports and resistances, and we're basically waiting on a break either to the upside or to the downside. You can see on Wednesday is when we got the federal interest rates, the number that was going to happen, and pretty much exactly what we thought was going to happen is what happened. We got the 25 basis points rate hike, and the market liked it, So, and it wasn't anything crazy, but we did go up to about 2.5%. And then the day after, on Thursday, that's when we hit a new high. This is the highest that we've been in. I don't know how long has it been, like 6 months or so. I think the last time we were that high, August of last year. So yeah, just about around there. So we hit a high of 24,271, but as you guys can see, we got rejected pretty quickly there. That is going to be a resistance area there. You can see that's the second or third time that we've been rejected from that $24,000 range. And then, price just kind of has gone down since then. But let's take a look at what's going on across the markets. Let's refresh this really quick. Looking here at Coin Market Cap. You can see some of the trending things going on here. And then overall, you can see the last 7 days, Bitcoin's pretty much been flat. Ethereum has gone up a bit, up 4%. BNB up 6. Matic up 10%. Shiba has been kind of on a run lately, up 23% in the last 7 days. If we keep going down, try to see what's been the big winners here. Let's see. Any big winners the last 7 days? Everything looks kind of flat. Phantom 17%. We have the graph GRT up
I think the entire
48%.
market's been pretty flat. Not even just the crypto market, but also like the Dow, S&P 500,
Yep.
Nasdaq. Like they're, I mean, down a percent. Overall, the market is green.
Yep.
And as a whole, like the entire market is green, but there hasn't been really a lot of activity. I think that we saw most of our activity already, and we're kind of consolidating at these rates for the time
Yeah.
being.
Yeah. The big winner that I'm seeing here in the top 100 is Singularity Net. So that, I believe, is an AI project. It's up 158% in the last 7 days. That's the big one that I'm seeing here, in the top 100 here. I believe that's an AI project. I know I've heard of it before. But yeah, so that's pretty much what's been going on here in the markets the last week or so, as far as Bitcoin and the altcoins. to kind of talk about what happened the last week, to recap what happened last week. Last week we had, of course, the Fed interest rate. We saw already how it impacted it. It was exactly what we were expecting. So we had a small move up and then pretty much a retrace back down. So we're back where we started last week. That's why you can see that we're flat. What's upcoming on the economic calendar? So we have a few things coming up. This week there's nothing major, but we do have Jerome Powell speaking tomorrow. Tomorrow afternoon, looks like it's around 12 o'clock, 12:40. We have somebody else from the Fed also speaking. So we have to, just kind of see what happens with that. That usually doesn't really impact the market too much. But you'll see that this week, that's basically what's going to be going on. We have a few people from the Fed that's going to be speaking. I think this morning, I think somebody was speaking, but I'm not sure. But as you guys can see, like, not much happened in the market. Now, the big thing that we have Friday, and I wouldn't call this too big, we have Michigan consumer sentiment. But the big thing that we're going to have, the next big impact and possible catalyst that we're going to have in the market is probably going to be on Valentine's Day, actually. So the day of love, hopefully it's a day of love for Bitcoin. On Tuesday, the 14th, we're going to have the next inflation rate reports coming out. So that's definitely always a big deal, always impacts the market because we want to make sure that the inflation continues its current trend. Last month we got 6.5%, down from 7.1%. And now we're expecting 6.3%, I believe. So that's what it looks like for the forecast right now. I don't know there's no consensus as of yet that I see here. But that's pretty much the next big thing coming up here in the next couple of weeks. And I think that's gonna directly affect all markets, depending what happens there. As you guys can see on the chart here, for the last 1, 2, 3, 4, 5, 6, 7 months in a row, the inflation has been dropping. They're expecting another drop here to continue. So I think as long as this continues, even if we drop just from 6.5 to 6.3, if we're at 6.3, I think the market, they'll take it and we'll go up a little bit. If we go below 6.3, then the market will probably jump pretty high. Now if we come back at 6.5 or higher, then that's probably not going to be good for the market, and we'll drop to lower prices at that point. So we got to kind of wait and see what happens there. What are you expecting from the inflation?
Well, I think everybody's relatively optimistic across like every market. Like I mentioned, we're about like 75% green in terms of bullish and bearish. So 75% bullish in the market overall, which is pretty good. Again, I think we're just consolidating prices. I think if we get hit with an inflation, I think we're pretty much just going to stop here. I feel like people will take some profit, but I don't think it's going to dump a lot, to be honest. We'll see what happens, but I think we're going to stay within the 21, 22 range, something like that. I don't think we're going to go under 20. I think we should expect to stay within this range for the most part, to be honest. I think people expected these things to happen.
Yeah, for sure. So I'm kind of in the same place. Now I wouldn't be, surprised if we did fall to 20 or below. Because I'm expecting that range right now. I'm kind of expecting anywhere between as low as 18. I wouldn't be surprised, and it wouldn't kind of change my perspective. Now, if we fall below 18, then we have to start looking at other scenarios. But I think even if we were to fall to 18 at this point, even though it would feel like a big drop. I don't feel like it would be that bad. I think that's a range that we could jump from and head right back to where we're currently at. Now I'm not expecting. I'm not saying that I'm expecting that, but I wouldn't be surprised. Now I know a lot of people are calling for 20,000 because of that CME gap. You know how people love CME gaps, um, but like I always say, you can use that CME gap if we start dropping towards that, but don't make your plan around the CME gap. There's a lots of people waiting on. I think it was like 12,000 or something like that, because there was a CME gap at 12,000. For years, people been saying Bitcoin's gonna fall to 12,000 because there's a CME gap, and for years, those people have been on the sidelines, still waiting, missing out on bull runs. So don't put too much into. Don't invest too much into those CME gaps. Let's jump into some news. So, what do you got for us today?
Oh man, news is kind of wild, and since we're already talking a little bit about administration and all that kind of stuff, let's stick with Washington here. So Washington hasn't had a very good outlook on the crypto market for the most part, which is very unfortunate. But I don't blame them because of everything that has been going on. So last week we talked about how the Biden administration is putting out a call for people to contribute to their research program to blockchain and distributed ledgers. This week and a little bit of mid last week, we started seeing that there will be a committee hearing by the banking. Let me tell you the exact word here. The Senate Banking Committee. They'll be having a hearing on February 14th on the talk is titled Crypto Crash, Why Financial System Safeguards Are Needed for Digital Assets. So it looks like obviously they're definitely trying to put their best foot forward and trying to get a hold of this crypto beast, because I mean, now, I guess I'll shed another little bit of news. If you haven't heard, in most recent time, FTX is actually asking for political organizations to give the money back donated by our notorious, co-founder and CEO, Sammy Bankman-Friedman. And I think also there was some donations made by Sam Tabasco, which was a co-founder. And I think Sam Tabasco did some stuff with Alameda. I think that was mostly his main role. But they are asking for a lot of that money donated back. There's a huge chart going around basically outlining how much money was donated to which committee. Most of them were the Democratic Party. I think there was like 5 committees that were Republican, but most of it was to the Biden administration. So interested to see how that goes. Apparently the statement says that they are allowed to ask for the money back, even if it was donated for whatever. They're sending out, I guess, individual letters to each organization doing this, and they released it to the public yesterday, Sunday night. Now, other things that are happening within the government is Custodia Bank recently was shot down in joining the Federal Reserve System. Now, this was a crypto-friendly bank, and it was basically denied access into the Federal Reserve System, even though they did every single thing by the book. In addition to that, the Fed also warned every other bank that they need permission from the Fed before engaging in any crypto activity. Those two things right there are very alarming. Now, of course, I understand, the need to slow down. But basically the Fed's like, hey, listen, if we don't tell you yes or no, you cannot do it. So it kind of puts a lot of non-commercial banks, more local, smaller branch banks, in a little bit of a tight spot, especially if they have been engaging with crypto or trying to, do more crypto things in the market. I've met probably like 5 or 6 individuals across different companies who have tried to do banking in crypto and like FDIC insured, the whole shebang, like a legitimate crypto friendly bank. And this doesn't look good for any of those people that I've met in the past. So not great. Personally, I was excited to see more infrastructure like this going into the financial systems, but because of all the recent events, and all the things that FTX is now trying to pull, especially getting back into the political party, that's going to leave a really bad taste in a lot of, you know, politicians' mouths. I've never heard of somebody making a political donation and retracting it.
Yeah,
Personally, I didn't think you could do that.
me neither.
So
That's
I'm a
wild.
little,
Yeah,
it is wild, right?
that's wild. When I saw that, I was like, you can do that? Like you can ask for the money
Yeah,
back?
I
Like
was like, oh my.
what if they
Yeah,
spent it
it's
already?
I think everyone is relatively confused as to, you know, that whole ordeal. Just I don't even know what to say, but it's honestly things are obviously there's not going to be a crypto ban, right? It wouldn't make sense for the government to say, hey, we need to completely, you know, ban Bitcoin. That's going to hurt the industry and hurt themselves, or they're going to shoot themselves in the butt, more than if they kept it around and, you know, obviously slowed down in accepting, you know, crypto transactions and thing within the system, right? Like we're basically back tracing to like 2016. You know, your Wells Fargo account's not going to go through. You can't buy the crypto, whatever. You know, we're going back to those times. That's pretty much what's happening, unfortunately. It's really sad that, you know, there was a pioneer who came into the industry, made a bunch of money off DeFi, and then basically shot us all in the ass, and that sucks.
Yeah.
It really does. These are unfortunate times, but this is why it's important. You know, not your keys, not your coins.
Yep.
Don't leave your money on an exchange. All the in between. It's just really unfortunate.
Yeah, there's definitely, I think last year was a year where there were a lot of lessons to be learned. And a lot of people had to literally pay the price for those lessons. So if you were able to get away from all that, hopefully, even if you didn't have to literally pay for those lessons, hopefully you're learning from those lessons, from the mistakes of others, because it does suck, especially if you lost a lot of money in that. It's terrible, right? And that money's stuck probably in limbo for either, if it's not forever, then, you know, look at the people from Mount Gox, right? Like now is it when they're starting to possibly get some of the money back. And that's been what, like almost 10 years, 8-9 years, something like that since that happened. So it's tough. You know, definitely, I know I'm putting out as much education as I can on, you know, people using, learning to use their own private wallets and owning their own crypto, owning their keys and all that. I know it's a little bit more work, and that's the thing with it. It's still a little bit, you got to put some legwork in, right? So a lot of people are too lazy to do it, but trust me, it's worth it. Because you don't want to, especially if you have a big sum of money, you don't want to lose a large sum of your portfolio in one of these crashes or bankruptcies.
Yeah. The only other thing I found interesting in regards to anything that's sprawled out from FTX is the replacement CEO, John, which is obviously very aggressively pushing out his efforts in order to try to save and reconstruct the company. He charged FTX almost $700,000 for his first week on the job. Exact number is $690,000.
Wow.
Was what he charged his first week on the job. Supposedly, he was charging $1,300 an hour, because that is, you know, something around about his rate, and his first week of the job was Christmas. So he worked through Christmas, and he worked 75 hours that week. So he did work a lot of hours, supposedly. I thought that was funny, but
Wow.
you know, I guess the least they can do is pay that much to a guy for a week who's trying to get back billions. So yeah, I thought that was a bit funny, but you know, it's all in a day's work. Your position and status matters, and it shows.
Yeah, 100%. We got
Yeah.
any other news?
So other than that, Binance. Let's talk about Binance. There's a few things
Mm,
going on with Binance. So first and foremost, this is for Binance.com. If you use Binance.com, they're temporarily suspending U.S. dollar bank transfers starting Wednesday. That really only affects 0.01% of their users because they basically kicked everyone that operates in the US off Binance.com. You should be
yep.
using Binance US. But nothing else is affected. You can still use, Google Pay, debit cards, credit cards, whatever. And honestly, them suspending the US dollar with Binance.com is a great call. They mostly because I think the US was hitting Binance at one point in time around anti-money laundering stuff and just KYC, all the in between. They were hitting Binance a lot for all that stuff. So that's the only thing that makes sense in my opinion, especially with all that's happening and everyone trying to blame Binance for the fall of FTX. I mean, I would definitely separate those two markets. Other than that, they are also launching a free crypto tax tool, which is amazing. So if you do any trading on Binance.com and you need something to do your taxes, they can process up to 100,000 transactions and help you file for your taxes. So that was cool.
Yeah, definitely very cool stuff. Especially now that it's tax season. I'm sure that's going to be a helpful tool. I know for myself, I always have lots of issues when tax season comes around. So that hopefully that makes
Yeah,
it easier.
I think it's I think it does help a lot of people who do a lot of trading. Of course, the less
Yeah.
trading you do, this doesn't necessarily apply to you. But if you have, because every time you do a trade, it is kind of technically taxable, unfortunately.
Hmm.
Yeah, it does affect that. The Super Bowl, I think, is like what, next Sunday.
Yep.
So they were, I guess there was somebody went around doing a poll to see who was participating in the Super Bowl this year in the crypto space, and last year Crypto.com, FTX,
Hmm.
eToro,
Coinbase.
Coinbase,
Yeah.
all those big players were like throwing, just millions
Millions. Yep.
in terms of like ad revenue to like get, their name out there for commercial. This year, there's only one company so far that's participating. None of the ones I mentioned. One of them is a blockchain gaming company. It's called Limit Break, and they're going to be giving away 10,000 NFTs via QR code during a commercial for the
Oh
Super Bowl.
wow.
So quite the change there, but as expected, welcome to the bear market.
Yeah. 100%. 100%.
Yeah, I think the last piece of news we have for today is Charlie Munger, which last week, if you guys didn't heard, he basically said that crypto should be banned. It's garbage. It's
Yep.
poo poo. It's caca. And then Micro Strategies, Michael Saylor came out saying, "Hey, this guy hasn't looked at a Bitcoin anything a day in his life. He doesn't know what a chart is for this stuff. He doesn't know what the white paper means. He doesn't know what sovereign money is." So pretty much that was Michael Saylor's response to Charlie Munger, which is great. So, and I think right now it's very crucial and critical for people to be loud and comment on activity and opinions from high operating individuals, especially those who have influence with the federal banking system,
Right.
which Charlie Munger obviously would be. So does Mr. Sachs. All those people who say genuinely negative things about the space need to be balanced out by high operating individuals within the Bitcoin space, because it's, I mean, right now, like, what we're facing in politics is it's pretty critical in my opinion.
Yeah.
Yeah. So
Yeah.
let's see what
100%.
happens.
Yeah.
Yeah, let's see what happens.
Like
It's kind of wild.
yeah, and the thing with those people, like those people have been billionaires for such a long
Oh
time,
yeah.
right? They're used to
Yeah.
how the system works. They already know how that game works. They know how to play that game. They know how to win at that game. So of course they don't want to change the rules of the game. Why are they going to change the rules of the game that they're already winning, that they've already won,
Yeah.
right? So
Exactly.
they want the rules to stay the same because it benefits them. But the issue with those rules, unless you're up there, those rules don't benefit like us retail people, us small players. We don't. Those rules are all made for the people that are already made, right? They're the ones that make these rules, right? And they make these rules to benefit them. They don't make these rules to benefit the middle class, the lower class. Those they don't benefit us. So that's the
Right.
issue. That's why whenever these big people, whether it's Charlie Munger, Warren Buffett, whoever it is, these really old people that have been around for a long time, and yes, they've been very, very successful, made a lots and lots of money, but you got to understand how they came up, how they made that money, and why they don't want these rules changed. They've already won this game. They've mastered it. They've won at it. Why would they want the rules changed? So that's definitely something you always have to take into account when these people
Yeah.
are giving their opinions and perspectives on it. Will their opinions or perspectives ever change? I don't think so. Charlie Munger, I think, is 99 years old. He's never gonna change his opinion. He's
No, that guy's done.
Yeah, and Warren Buffett, he's what he's in his 90s as well, mid 90s or
Yeah,
whatever.
these guys, unfortunately, they're gonna go out, with their opinions. The same way your grandparents, they have their opinions, their beliefs,
Right,
their ideologies is the same way these guys who have, made their fortune a very specific way, and their family has made a fortune a very specific way. They're gonna keep that way.
right,
They're not necessarily gonna say, "Hey, we're gonna move," especially because cryptocurrency is seen as a threat to the financial system.
right,
It's just not going to happen. And banks are actually now moving away from embracing blockchain as the, most innovative technology, and now they're looking at AI. AI is the hot topic.
right,
It's no longer blockchain. It's no longer, having these distributed ledgers to process transactions and make them immutable and blah, 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 blah. It's now AI. A lot of people are trying to see how AI can affect the banking industry. And I think that's mostly with I don't know if they're trying to replace talent in that case, because I really don't see how AI would be used within banking unless it's more like talent pool, because it's not going to mess with the back end. Like, make sure you can use AI to help you with like code and stuff, but that's
right.
more on the developer end, and there still needs to be human contact there. So it's really reducing talent pool and utilizing AI to lessen the amount you pay out for humans, pretty
Right.
much. So
Yeah, yeah.
I don't know. Robots are taking our jobs, guys. Don't forget.
I don't think AI and blockchain are two completely different things. I don't think AI replaces blockchain or anything like that. Because
No, not that it replaces it. It's more of the shifting focus. There's
right,
not as many banks focusing on blockchain technology for use case. For example, J.P. Morgan specifically is shifting away, but J.P. Morgan already also launched their own private chain, right? So now they're like, okay, we got this. Let's go look at AI. And some other banks are also following pursuit to see how AI can benefit their banking businesses.
right,
And it's obviously it has to do with a lot of the stuff that's going on in the news, the way the market's going,
yeah,
and government saying, hey, no more crypto stuff until we say so. So probably has a lot to do with that as well.
yeah, 100%. So let's go
Yeah.
ahead and let's run a little analysis on Bitcoin. Let's see where we closed last week, how it looked last week, and what we could possibly be seeing this week. So let's go ahead and open up the charts here, and we're gonna start off here let's start on the monthly, since we closed our monthly candle recently here. And we can see that we had obviously a huge month in January. It was the best month that we've had since back in October of 2021. So it's been a while. Um, and we started this month off so far pretty flat, so not too much to report there on the monthly end. If we go to the weekly, we can see here that last week was our first red week in 5 weeks. So in 5 weeks, last week was the first time that we've had a red week, and it wasn't really much, right? It was just a 3% drawdown from where we were. We hit a new high, 24,000. And the low was 22,368. So we're in that range, and I'm expecting this to kind of continue here. We broke out of this resistance area right here, and now we're kind of in the middle of it, right? So we're in the middle. Here, there's not really too many things as far as resistance and support. And if we pull up here the volume shelves, we can see here the main volume shelf is going to be right here, and that price is right around 22,000 to 21,000, all the way down to 20,000, right? And then as we go up and as we break through these levels, you can see, look at this huge gap here. There's a huge gap there, and if we zoom out a bit more, we'll see that there's a little bit more volume there, but it's still, look at this huge gap, right? So what that means really is that we can, if we get enough momentum, we can break through all this pretty quickly and move up back to these volume shelves up here. So this is, starting at 30,000 and going all the way up, right? So that's something to look at. If we get a move up like that. I'm not expecting anything crazy, at least not anytime soon. But what I am looking at right now, if we go back here to the daily, and let's get rid of the volume shelves real quick. And what we're going to look at is this right here, these two lines. And these two lines right here is the 50-day moving average and the 200-day moving average. And what you guys are seeing right here is what's about to be a cross. If it hasn't crossed yet, let's see, has that cross happened yet? So it hasn't happened yet, right? But you can see how close this is. So we're pretty much, it's a matter of days. I'm expecting this cross to happen this week. If we just kind of follow that trend there, it should happen. What it says today, but let's give it a couple days, right? At worst case scenario. So that cross is going to happen, and what exactly does that mean? Well, a golden cross usually means a change in trend, right? So if we look back at the death cross, right? So there's a golden cross and there's a death cross. Death cross is this right here. When the 50 and the 200, when the 50 goes below the 200, that means a change in trend and then it's a death cross, right? So that means price is going to go down. So you can see that after we had that cross, price was at, let's see, the close on that was 43,000, and obviously you guys can see what happened after that death cross. Now, if we go back further and we looked for the last time that there was a golden cross, so we had a couple fake outs here during the last bull market. We had a death cross right here, and we had a golden cross right here. So when we got the death cross, we did get a move lower, but then we got to move right back up, and then we got the golden cross here, and after the golden cross, you can see prices went up. Eventually, they did go back down. So usually, it means that there is a change in the trend, and if we keep going back, you'll see this over and over and over. I've done a video on how accurate these are and what their percentages are and how often they've hit, and I'll probably do a new video on all this sometime this week or next week. But just to give you guys an idea, you can see here in 2020 in May we got the golden cross there. After that huge drop down when the whole thing about the pandemic happened, and after that, at that point, we're sitting around, we're under $10,000. After that golden cross is when we pushed all the way up, right? So not saying that that's the end all be all signal to buy, but what I like to do, I like to think of this as piecing a puzzle together. So last week, I think it was last week or the week before, we spoke about the the hash ribbons giving a buy signal. You know, the hash ribbons has basically hit 10 for 10, 100% accuracy, and on, you know, as far as when it gave a buy signal, that the price initially went up after that buy signal, plus calling the macro bottom, that hash ribbon indicator has hit out of 7 out of 10. Now we're also getting the golden cross. So now we have multiple different things giving us these trend reversal signals, bottom signals, reversal signals. So again, not saying that it means that this is guaranteed that we're going to go up, but just trying to give you guys an idea of historically what these things have meant, how price has reacted, etc., etc. So I did a video on hash ribbons that you guys can check out on the channel, and I'll do a video on golden crosses just to kind of update you guys on the information. I already have a video, but I'll do a new one to update you guys, and so that we can go over the previous ones that we just saw recently, the most recent ones that we saw. So, and I'll give you guys the average returns, the average moves after getting these signals, what the accuracy is based on these signals, all that. I'll get all that information together for you guys and throw it all in the video, make it very nice and simple for you guys. But that's the big thing that I'm watching here now going forward as we continue going forward into this month in February, to kind of get an idea of where we might go this month and possibly the rest of the year as we continue down the road. But remember, crypto has never really lived through a recession. So that's something different. That's all that you also have to take into consideration. The wars and all that stuff going on, the pandemic. There's a lot of macroeconomic things going on around the world right now that can completely affect all these signals. All these signals could be wrong. We saw that back in March of 2020 when we saw the pandemic, right? We had all these same signals and they were wrong. So we had the bullish cross, and it didn't matter. The price when we got hit with the pandemic, what happened to the price? Prices went to new lows and it fell down to $3,000, right? So it doesn't mean that we're going up. It just, remember, we're playing a game of probabilities. We're looking for probabilities. And we're looking for signals that help us get that edge and that probability. Try to figure out what the next move is. But at the end of the day, anything can happen here depending what happens to the overall macro economy, with wars, with pandemic, all that. So now to zoom in a little bit more as far as what's going on this week. Like I said earlier on the video, in the stream today, there's not too much going on this week. We have Powell speaking tomorrow. That could affect prices a bit depending how his tone is. If he's either bullish or hawkish, we got to kind of see what happens with that. That could bring some volatility into the market tomorrow. I'm not expecting too much today, and then leading up to next week is when I expect a little bit more volatility, and definitely we'll see some volatility on Tuesday. Now, where we can go from here, the main areas that we're watching right now is probably let's pull up the volume shelf real quick again. So we have the yellow lines here are the Fibonacci retracement levels, and then the volume shelf here is where there's been a lot of buy and sell activity. So that gives us a lot of information on these areas and these zones of where price could go, where there could be support, where there could be resistance. So just from looking at these two things, we have a resistance sitting up around that 27, and I'll call it 27 to 28,000. And then you can see as you go up higher, 30,000, all that, the volume starts picking up a lot there. So that means there's definitely resistance way up here, right? So if we were to move up, then that's kind of the areas that I'm looking at. Anywhere between 26 is where this Fibonacci level is, all the way up to $30,000 would be that range, that zone for resistance. in the more immediate future, we're pretty much looking at right now at $24,000. That's the level that we've been rejected at multiple times there. You can see that level there. We've been rejected in the last week or two. And you can see the same rejections right here back in August, July, August of last year. We got rejected in these same areas. So you can see historically, this is a resistance area there that we have trouble at. And I think it's because we're so close to 25,000. 25,000, of course, big, even number. It's a psychological resistance. So that's going to play a role there as well. But if we do break above 25,000, that's when we can then start looking at that next Fibonacci level right here and these possible levels up here at $30,000. Until then, though, we're pretty much stuck in this range that I've been talking about, between anywhere between 18,000 to where we're at right now, around $25,000. If we do go down, I'm looking at $20,000, the big support, right? So that's going to be the big support. And you can see in the volume shelf, that's the biggest, that's where there's the most buys and sell orders, where the most trades have happened. So that's kind of what we're looking at right there. If we saw a push down, we also have the Fibonacci level sitting right there around 21,000. And then we have the 50 and 200 day moving average actually now sitting about at $20,000 as well. So if we had a move down, we would have three different supports there. We have the Fibonacci level, we have the moving averages, and then we have the volume shelf right here at 20,000. We also have, of course, the CME gap that's sitting at 20,000. So there's a lot of things happening at $20,000 right now, which is why I think we could potentially see some sort of push down, or at least an attempt at a push down to that price range. I don't see any reason why we would just out of nowhere drop $2,000 or $3,000, but you never know in crypto. So that's why you always got to kind of know those scenarios to be prepared in the event that something happens that, you know, out of the norm that could push prices down. That's kind of the areas I'm looking at for support there. So let me take a breath real quick. I feel like I just spoke forever.
Yeah, it was quite a mouthful.
Yeah. If you guys have any questions, let's look at the chat. I know we have some people in here. If you guys have any questions, drop it in the chat right now, and we'll be more than happy to answer those questions, whether it be about the inflation data, interest rates, price analysis. If you want me to run through your favorite project, I'm more than happy to do that. We'll take some questions. We'll give you guys a couple minutes to drop some questions. If not, then we'll look to wrap things up. What do you think about all the million things that I just said?
Wow, processing.
Yeah.
Okay. So I mean, I think overall, again, still think that we're going to play within the range as you mentioned, and we're not necessarily going to go past, what was it, like 38?
Yeah.
Was like the max.
Yeah, 38. 30 to 38 is going to be huge resistance areas.
Yeah, I don't see us going past that this year unless certain events which would correlate it to run that high would happen. And I mean, those events just need to happen, like like another COVID, something of that nature, something like just like world changing. Honestly, I think if there's which I don't think there is, but I think if there's even a ban on crypto, like that even might make it run, because of people like the idea of having things that they can't have. You know what I mean? Something like that might do it, but yeah, again, consolidation between those two range. I think overall is a very thorough analysis. Somebody in the chat said very impressive analysis. Same. Flags are. It looks like we're going into a flag. Obviously uptrend. Which way will we break? We've been positive for a long time, and hopefully we remain positive. So I mean, if we I think overall for the next part of the year, we'll still go up in this bull trend. um, it does look like we're going to continue.
Yeah, for sure. And boy Nilo, I hope I'm saying that the name correctly there. Thank you, I appreciate it. Um, but yeah, like from looking at the patterns on the charts right now, um, it's now there. It could break either way, right? Now, when you start talking historically about these patterns, this is a bullish pattern. So the probability is to the upside. We're supposed to get a break up, right? So that's kind of how I'm looking at it. But at the end of the day, it could still, a probability means that it's not guaranteed. It means that there's a higher chance of that happening. However,
Right.
there's still a chance that it goes down. So, as a trader and an analyst of numbers and trends and historical data, that's what I'm kind of looking at. I'm looking for probabilities. I'm not trying to make guesses, guys. I know a lot of people say that I might be trying to guess the price or make predictions. And guys, I am not trying to make predictions. What I'm doing is looking at what's in front of me, the data, looking at the numbers, looking at the trends, looking at the current the patterns, looking back at historical data and how it usually plays out, and then looking for the probability. And then I play the higher probability, and that's how you trade. You look for high probability setups, you play those setups, and that's how you make
Right.
money in trading. Um,
Yeah, I think there's a narrative that gets pushed within the crypto industry because Bitcoin is so volatile that all this is guessing. But we also say that this is all priced in. So which one is it?
right.
I think for the most part, every industry has an analysis, and this is exactly what this looks like. This is a proper analysis, guys. If you haven't seen one before, if you're new to trading, this is what the big boys do on Wall Street when they're trying to figure out which way the market's going to go. So,
Yeah, 100%. So yeah, so if anybody has questions, I haven't seen any questions come in. We've pretty much gone over everything that we wanted to touch on today, I believe. If we look at like Ethereum or something, I know some people have asked me for Ethereum and some of the other altcoins. Now, the reason that I generally cover Bitcoin is because everything else pretty much follows Bitcoin, right? If we look at Ethereum, for example, let me again take off the volume chart here, um, the volume shelves. If we look at Ethereum and then we look at Bitcoin, they're very, very similar. They're not going to be exact, but they're very, very similar. We see basically the exact same patterns, right? You see how it dropped, then consolidation, move up, bull flag. If we look at Bitcoin, drop, consolidation, move up, bull flag. So it's not going to be exact, but it's going to be very similar. And then if we start looking at other coins, look at Solana, drop, consolidation, move up, flag. Avalanche, drop, consolidation, move up, flag. XRP, drop, consolidation, move up, flag. Like you could just kind of go through all of these and they're all gonna look very, very similar. They're not all of them are gonna be exact. There could be news coming out of one that for some reason it's not correlated currently with Bitcoin. But for the majority, as you go through these charts, they're all gonna look very, very similar. So
right.
that's the main reason why I do that. Why I kind of look at Bitcoin. Bitcoin is pretty much very similar to all the other coins. So by doing an analysis on Bitcoin, it's basically like doing an analysis on every other coin.
Yeah, for the most part, guys. So keep your eyes and ears peeled for what's going to happen next on the market. I think. What do we think about altcoin season? Is altcoin season, is that like canceled for right now? It's mostly just everything's
Well,
following Bitcoin.
yeah, I mean there are some that have been taken off. I know a lot of the AI projects have been taken off, riding on that hype. I will say be careful what projects you're putting your money into because what's gonna happen now, people want to ride the hype. So you're gonna see a million, 1,000 different AI projects, right? That really have nothing.
Oh yeah,
But they're trying to make
absolutely.
a quick buck. So you got to be careful with that. We've seen a lot of some projects move based on news, on some sort of news catalyst. We saw that with
Hmm.
AVAX recently. We've seen it with Doge when the thing about the payments, Twitter payments. And then we have some updates coming up this year as well. I know Litecoin has a halving this year. There's a Litecoin
Yeah.
halving this year. I believe it's in August. I have a video that I'm working on for this. It's just I want to make sure that I get all the information right. But basically, there's a pattern. If you go back to the first halving, I think it was 2015, if I'm not mistaken. There's that the price of Litecoin goes up pre-halving and then it goes up even higher post-halving. So I'm doing a video breaking all that down for you guys. Think I think I'm I think I'm releasing that one this week. I gotta if I can finish it and get it edited in time, I'll release that this week. Um, if not, I might release it next week. So it's either this week or next week. I have a video that I'm working on right now on that, breaking down the entire thing. That's something that to definitely be aware of for Litecoin. And as you guys can see, if you pull up the chart right now, it's been trending up now for a little bit. So it's back at that $100 range, and it was just sitting at $50, a few months back. So $50 was definitely a very good buy. You would have done 100% on your money already. And I because of the halving coming up, I believe this is a great buy right now, and I do believe this is going to continue up, especially if the rest of the crypto market continues up. So I'll have
Yeah.
that for you guys
There's,
soon.
there's another coin I think is also halving this year, which is a personal favorite of mine, mostly because I contribute to the project, but it's called Nervos CKB. I think their halving is in November, but very few proof of work protocols left out there. Litecoin, Nervos, Ergo, a couple others. There's this blockchain called Kwai, which does merge mining.
Mm,
Yeah. But
I
I
see.
think a lot of people, for some reason, I don't know why. Actually, I do know why. It's because it's a better consensus mechanism, and it's basically like sensor proof is what I want to say. In terms of centralization, because that's like everyone's been scared about what's going to happen with Ethereum and whether or not it'll be decentralized eventually. But proof of work is seeming to kind of come back into swing again, which I like. I think proof of work is important. I personally, I get the idea behind being more eco-friendly with the staking.
Yeah.
However, that does mitigate only certain players participating in the pool
Right.
versus having a larger, potential uh, broad spectrum, right? Because miners, they come and go. Like just a few years ago, Bitmain almost went bankrupt when they decided to go with Bitcoin Cash over Bitcoin when that whole fork happened. And you'd be surprised. Like these things happen all the time. Miners get consolidated. China had the most mining hash. Now it reduced. Now it's the U.S. Like things move, and I like that. I really do. So I very very POW bullish on POW.
All right. On that note, we haven't got any questions, so I think we're gonna wrap it up here. We're coming up on the hour either way, so we were able to keep it an hour today, so I'm very excited for that one.
Yeah, we were.
We've usually been
We need more
running.
questions, guys. You gotta ask us crazy questions. Ask
Yeah.
ask Jay how many toes he has or something. I don't know. You never know. You'd be surprised.
Yeah. Yeah, definitely. So I appreciate all you guys. Thank you guys for tuning in, and again, once again, we'll see you guys on the next one next week, same time, same place. That's pretty much it. I'll see you guys there. Peace and love.
Peace out, guys.
All right, and we're out.
Cool.